Hi guys, welcome back to Father and Son Investing. This video will follow up on the last video I made at the end of 2023 talking about I-bond strategy. I'm going to give you what my I-bond strategy is. Here's the bottom line up front. Right now, I'm waiting to purchase I-bonds until May 1st because I'm interested in finding out what the next fixed rate will be and because I believe that the inflation rate is going to be significantly lower than it is right now. What am I doing in the meantime? I am purchasing Treasury bills. That's my plan. If you wanted the bottom line up front, you can end this video right now. If you want to hear about why I'm making this decision, then continue on. For those of you that are still watching this video, here's why I made my decision. I think that there are two groups of investors here in I-bonds. I think there is one group that was attracted by the 9.62% interest rate and immediately started buying I-bonds. I actually suspect that that group is quite large based on the number of people buying I-bonds just before the end of October. There is another group of I-bond holders, though, who have been in this for the long run. They're using it as a long-term savings tool. I think that my strategy actually will pay off for each group. My reasoning for that is I think that the inflation-adjusted rate for the I-bond will be significantly lower on May 1st. We'll actually be able to calculate that in April, but it will be officially announced on May 1st. I think it's going to be significantly lower than the 6.48% that we're looking at right now. Significantly lower, I think it'll be around 2% is what I personally think. To back up that statement, one can look at the unadjusted 1 month percent change for the CPI-U. Since July, this number has gone essentially nowhere. This percent has gone essentially nowhere. We got 0.0, 0.0, and then you can see the September, October, and November numbers. November particularly negative 0.1%. Let's just look at the prediction for what December's will be. That actually will come out in just a few days on January 12th. According to the Cleveland Fed's Nowcast site, their prediction for the December 2022 CPI 0.12. All of this equates, in my mind, to a very low inflation-adjusted percent for the I-bond come May 1st of 2023. So that's my reasoning for the first group of people, those who dove into the I-bonds for the very high yield, 9.62%. Now, for those of you who fall in the other camp, the group that is in this for the long term and is using I-bonds as a long-term savings tool, I still think waiting until May 1st could be to your advantage. Why do I think that? Well, of course, we know that this last go-round on November 1st, the Treasury Department did add 0.4% to the I-bond fixed rate. Before it was 0%. My thought is that because the inflation-adjusted rate is likely to be coming down, that the Treasury will, in my opinion, likely be adding some to the fixed rate for an I-bond. So therefore, waiting until May 1st to purchase my next round of I-bonds, if I'm in the long-term group, the long-term saver group, could be to your advantage because you can get a little bit more of that fixed rate, higher fixed rate than the 0.4%. So I think that this current strategy here could pay off for both groups of investors or savers here. Now, not wanting my money to just sit around for 4 months while I wait for the next I-bond interest rate announcement, I have chosen Treasury bills as the way to use that cash to make some yield while I'm waiting to find out May 1st. If you don't know much about Treasury bills, I have several videos about Treasury bills. I'd encourage you to go back and watch them. There's videos discussing the advantages and disadvantages of Treasury bills, including why I've chosen Treasury bills currently over Treasury notes. If you're not familiar with what kind of yields Treasury bills currently have, let's just look at the latest auction results. The 17-week Treasury bill has an investment rate of 4.075%. The investment rate is there to help you be able to compare this to other interest rates on a yearly basis. So that's what you can look at. So when you see these different numbers here, the high rate and the investment rate, just think of this as the number you can use to compare to other interest rates. 4.705%. We're approaching 5% on a 17-week Treasury bill. 17 weeks right now would just about get you through to May 1st. The next one would take you beyond May 1st. But a 17-week Treasury bill would get you essentially about 4.075%. Now, that of course is as of the last current auction. The issue date will be January 10th. There will be another 17-week auction coming up this week, and there's no guarantee that that 4.705% rate will occur again. My suspicion, though, is that the next one will go even just a little bit higher. Now, the next two videos that I make will discuss other options other than Treasury bills. This is the one that I prefer, but there are some other options out there as well that you may begin to look at in lieu of I-bonds. If this information was helpful for you, please give us a thumbs up, and we'd love to have you subscribe. Share this type of information with a young person in your life. Get them involved in investing and help them grow their future. Until next time, enjoy your investing.